Margie Patel, September is traditionally a tricky month for stocks, at least according to the Stock Traders Almanac. So you bullish here, you bearish, what are you?
I think we're going to have more chopping around. To me, the market has not convincingly hit a low, so that says to me the market should go lower for at least the short term.
Well, can you talk about investor sentiment? Because we saw the fear index, the VIX, top 40 over the course of the summer. Now it's below 25. But I guess you don't think that flushed enough ill will towards the market. We still need a little bit more, some retesting. Is that what you're saying?
Well, I think so. And I think that a lot of real investors weren't participating. I think to see the kind of volatility without any direct cause, it shakes people's confidence in investing. And so I don't think it's going to draw new money into the market at these levels until the markets go a lot lower. The things look like a bargain. So that says for me, chop around with a downward bias.
But one of the causes, once again, this summer was China, their devaluation of the yuan. So do we need some stability from China, or at least a clue that China is doing okay for people to get back into the market, to have a little bit more confidence?
Well, I think China is on a deteriorating, decelerating course of economic growth, so I'm not looking for any kind of a magic fix, and clearly what they've tried to do has not worked, so I think more of the same, just continued erosion and growth, so I don't think that's going to be a source to help us bounce back.
And as a result, are you staying away from emerging markets, and so you prefer to keep money domestically?
Yes, and even for my domestic companies, I'm looking at those companies that have a very high percent in U.S. assets, because I think that's where we'll have the best growth. Emerging markets, I think, looks still pretty grim and deteriorating for as far as the eye can see.
Companies such as, can you give me an example of a stock you like?
Well, Home Depot, which benefits from the small resurgence we've had in building, more money in consumers' pockets. They have a wide range of products that will benefit. CVS, because they benefit from demographics, from changes in healthcare, health services provided. They've been very innovative. Even on the utilities side, Dominion Resources, I think very much U.S.-based, will, I think, have competitive returns in a slow-growth economy.
And what about your stance on energy stocks? We've seen oil fall precipitously, over the course of the summer. So do you like energy here? Is oil going to go back above 60? I don't know. Where's it headed?
I think we are in a new trading range for oil. I'm thinking $40 to $60 a barrel roughly, which is pretty grim for a lot of producers because they have been continuously outspending their cash flow. A lot of the smaller, more levered ones really can't survive with oil in that range. So I think lower for longer will do a lot of damage to the sector. So I have really virtually no holdings in the energy space.
And problems with energy really brought down the high yield market last winter. So what's your view on high yield now? Have all those problems been flushed away?
No, we actually have seen very, very few bankruptcies. The overall market still has only about a 2% bankruptcy rate. I do think that will change, particularly in the energy space. I think we'll have substantial increases in bankruptcies of smaller companies. The rest of the high yield market, I think, looks like a pretty good value because they should be able to survive even a pretty substantial slowdown, and providing yields of anywhere from 5 to 7.5% looks like a pretty competitive return at this point.
And then finally, since you brought up yields of some sort, what does the Fed do, and how will that affect the market, and what will your reaction be, whatever the Fed does?
Well, clearly the Fed would love it if the market data would give them an easy pass to make the decision for them. And I think they've waited so long, it's going to be difficult. But I think what it really says is underneath it all, 25 basis points won't matter to American consumers, American business. But it just suggests to me the volatility we've had in the stock market and the high yield market says there's a lot of levered players. That 25 basis points is a big difference. And that may make the markets vulnerable to more price erosion, because as those marginal levered players take money out of the market, that could help keep a lid on prices.
Thanks a lot, Margie Patel.
Thank you.
Thank you for watching The Street.